You know, from a bear market, I think it's really hit everyone by so much surprise on Friday. It was quite remarkable. I was watching the trade. I've been in UK. On Thursday, I went to the IEA in Paris, International Energy Agency. You know, 100 million barrels of crude we're consuming the first time through that last quarter. And you really can't believe that a market like this can come under that much pressure to the downside. 8% crash on Friday night. It was just incredible. I mean, the shorts are all over it. Hedge funds would be making, you know, huge bonanzas, and everyone's short crude, and there's probably further downside. I think the momentum to the downside is going to be, you know, quite a few bucks yet. You may see a 47, 48 handle on WTI. I think Brent's got the capacity to be under that 60 number, and it just seems to be one-way traffic at the moment. We've got the meeting next week in Vienna. I'll be heading to that one on Thursday week, up on there on the 6th of December. I think they've got their work cut out. They're going to be very busy people over there in Vienna.
Peter, so very pointed question. Do you think this is a technical trade and that's why you're seeing such a big cutoff on crude, or fundamentals have changed in the last few weeks? Because 2 months ago we were concerned about Iranian supply, and now we're worried about
$85 to $100 a barrel then, Samita.
Exactly, right? I mean, you had reports from Goldman Sachs to JP Morgan, 100, 120. Yeah. I mean, we're far from that now.
Oh, well, you're half price. You know,
it seems like it's heading lower now.
Yes, exactly. So all of those considerations really stems back, I think, from one of the big comments coming out of President Trump in the early part, because he had the midterms, he was worried about inflation, worried about the global dynamics as far as OPEC. Please cut your price. There was some leverage with Saudi Arabia, the Khashoggi issues, and all of that has played in.
It's all fell and played out as script, almost like Trump wanted it and he made it happen.
Absolutely magnificent when you're looking at it in that sense. And I think that there's even further cuts, quite simply in the sense of price, because of that US shale. What's coming out of there is just monstrous. They're now #1 in the world.
But do you think that a price below $60 per barrel is going to be something that will be acceptable? Or is it that markets have suddenly realized now that the demand is flowing? And with the slowdown on the supply side, if you go to see, the output with regards to Saudi Arabia, US, Russia is increasing right now, at least till the time on the 6th of December when, you know, if any cuts are decided.
Who knows where it can go? I mean, no one would have expected to see this sort of price movement so rapidly and so volatile. The other side, of course, is these Iran sanctions really haven't been a great, disruptor to the market. And the market has really absorbed them quite comfortably. And moving forward, I don't really think that there's anything there to drive pricing higher at the moment. We've got a very strong US dollar, and that needs to be taken into consideration. Yeah. They've been very well bought up from, you know, that 89, 90 US dollar index now to that 96, 97 level. And there's every chance that if you see a rate rise in December, you may crack 100 by Christmas. So there's a lot of strong momentum to the upside for the US dollar, and that seems to be a little bit of a trade or a hedge to the...
Peter, before the 6th of December as well, how important is the G20 summit going to be? Do you think Trump is going to carry oil forward to the G20 summit? And we could hear some comments on that front as well, which could then have a bearing.
Well, I think the first thing is that they've got to break some bread and sort out the trade issues, if that's going to be. We saw in Papua New Guinea a couple of weeks back, APEC, there was a very cold, frosty response. And unless President Trump, and he's a deal maker, unless he can do something quite interesting in Buenos Aires, it's going to really impact that December 6 meeting date. So it seems to be just a little bit of a wait and see. This week will be very, very interesting. Black Friday, I tell you, it was certainly Black Friday if you're a long bull crude trader on Friday. But if you're bearish, I mean, these guys, it's absolutely fantastic. Everyone's shorting the market, and it's incredible.
Right. So, okay, so, I mean, I know a lot of this has got to do with politics, because I can't rationalize why else we'd see the kind of sell-off that we've seen. Even if the OPEC decides to cut, which is now getting priced into the markets, and we're still seeing a sell-off, 1 million barrels is, I think, what the market is expecting. Assuming that we do get a million barrels in production cuts, will that do anything to prop up prices, or at best it's going to do is to keep prices where they are? A, and B, I believe that Saudi is now beginning to feel a little duped by what President Trump has been playing along with, because suddenly last week there were reports that they don't hold the Saudi responsible for Khashoggi's death, which again makes me wonder that they're pushing for lower prices. So one way or the other, I don't know how much of a relief you're going to get in even after OPEC comes in. And we go into a time when most most people go off on holiday any which ways, which may actually be good for crude.
Well, it could be. I mean, it's not unusual when you see these announcements coming out. What's fascinating is after the meeting at 5 o'clock, there's a news debrief. So all the analysts are there, and then you normally see a whipsaw. So the market moves up 5 or 6% or 7%, normally violently to the upside, and then it settles down. It whipsaws for a couple of days. I wouldn't be surprised to see the same sort of reaction this time, and those sort of fundamentals. Let's see what happens as far as the million. Let's see what happens as far as G20, and then the consideration what the Saudis are prepared to do, and Russia, of course. They've been a little bit of a sleeper on this. They haven't commented too much. But I'm sure that this super OPEC meeting is going to be fascinating how it plays out, and so many moving parts and different actors coming with a different viewpoint.
Right. What about US shale? Because that again is a jack in the pack. If the OPEC doesn't cut production, Trump's dream of oil below $50 a barrel becomes a reality. But more importantly, I believe Bacon in North Dakota is at record production in terms of shale gas since 2014. How is that dynamic going to play out?
As far as my understanding is quite simple. The president has an agenda, and that is to contain inflation. He doesn't want to see 3 rate rises.
He cared about crude.
Oh, I think
directly is what I mean.
Well, I think he worries about crude in the sense that he believes that the US public are paying too much for it. So,
and it was.
Yeah, and the other side, of course, is that he's not worried about how OPEC feels on this. He's only worried about his own economy. And it's very, very bullish from a president to come out and say that. I mean, we haven't really seen that in the last 20 or 30 years. No president's come out and said, oh, look, price of oil and this and price of oil of that. So he's really contributed, I think, to this big sell-off. How that plays out as far as his own viewpoints, that comes back to the US shale. And he's in there to really, foster and make sure that the US produces and makes it a powerhouse. And that's what he's doing from an employment side and from the production side.
Ball gaze what's going on in Trump's mind, which is very, very
Samina,
tough.
you can't do that. It's all on Twitter.
I should be an astrologer, shouldn't I?
Yes, you should be an astrologer.
And Peter, overall right now that we've been talking about with regards to $100 is something what everyone predicted. If you see between April to October, we've seen an average of around $73, $74 per barrel. Going ahead, everyone was expecting 2019 at around $83, $84 per barrel on an average, where majority of the brokerage houses have come out and cut their target prices to around $70 to $73 per barrel. Do you think $70 to $73 per barrel on an average is going to be a possibility in 2019?
I think that that's very hard to forecast because we're not sure where the US economy goes. We're not sure as far as who would have thought at the start of the year, and a couple of points in that you would have seen the Chinese market down 27, 28%. You've seen what's happened as far as those cryptos. They're crashing. You've seen what's happened as far as crude crashing. US equity is going to stay there. What's going to happen with the US bond yields? Are we going to see 3 rate rises next year? So many different parts there are unknown. But if we do see the market be a little bit more sold off in the sense of US equities, I don't think that's going to be a good thing for the price of crude. I think it's going to actually take more steam out of there, and probably you're going to be pushed to the downside again. So we've just got to, it's a little bit of a wait and see. No one would have expected to see that in the start of October. If you said, oh, by the 26th or 27th of November, crude's going to be down nearly 30%, they would have laughed at you. But it's happened, and it's been very, very violent. And I think that sell-off will continue over the next week or so.
So what does one do ahead of OPEC's December 6th meeting? Fair to assume the long calls on crude could be initiated. A rebound is what we are hoping for. And of course, Russia could also be the game changer there. So how would you play crude right now? I mean, at this price, if you're a trader, what would you be inclined to do?
If you were short over the last week or two, you've built it's been fantastic in the sense of that downdraft and what it's done for your balance. You'd have your stop losses wrapped up, everything would be fine. It'd be a very, very big momentum trade. Where are you today? You're probably rubbing your hands with glee going, this is just fantastic. Any retail trader, if you're an oil trader or an oil producer, you would have hedged your positions. So that's just the dynamics of the market. If the market does turn, and it turns quickly this week, then they'll, you know, exit those positions and ramp up. But at the present time, I think most traders would be certainly, you know, bearish.
Have hedge positions on long trades on crude actually reduced substantially in the last couple of weeks?
I think they have, because I've just been looking at, you know, the open interest sort of stuff. Yeah, I'd say that, you know, if you're a hedge fund, there'd be no way you'd be long.
Okay, very quick question. We can't not talk about currency and commodities when we're here.
They all go hand in hand.
They do, really. So, of course, the dollar has been beautifully running up, and that's been working fantastically well for us. I mean, we're back at 71 against the dollar.
Exactly.
At 74, there was talk about 77. Fortunately, that hasn't happened. So it seems like the dollar-rupee pair is stopping out at these levels, or at 74 rather. What's the trade on the dollar-rupee pair? What kind of a range are you looking at over the next quarter? And more importantly, how would you play the dollar index? Because your bond yield's also steadying up at 3% now.
Well, first off, do we see a rate rise in December? So if that's going to happen, then you're going to see further momentum to the upside, I think, for that US dollar. Not unusual at that time of year anyway, for Christmas and so on. You normally see a Christmas rally in the US dollar. So that may touch that 97, 98. As far as the Indian rupee pair, I think it's going to be range bound. I don't see anything dramatic happening. It's a 69 to 72 handle, somewhere in between
so right
there.
In between at 71.
Yeah, I can't see any massive breakouts. Again, what happens as far as does President Trump, you know, if we don't see a rate rise, and that's going to be interesting in itself.
Which is unlikely, right?
It's very unlikely, but who knows? So all of those components coming into it, I think that the US dollar will probably take a little bit further upside. And if you're a dollar, you know, if you're a dollar bull, it's been an enormous trade since really February or March moving forward. $88, $89 index, now you're looking at 97, 98 sort of number. So
97, 98 on the dollar index will not have that much of an implication on the dollar rupee pair though, right? Because I think the bigger dynamic for us is crude.
Exactly.
So we would still not break out above 74 realistically, even if the dollar strengthens about 97.
Yeah, I don't think so. I think as far as that India, you know, rupee pair, with the US dollar, I think it's, as I said, range bound. I don't see any. I think your moves have happened this year. It's been very, very, very solid moves, and I think it's going to be contained.
So one more quick question. There's so much talk about slowing global demand, and all eyes on the G20 summit for that. Very obviously, the impact of that is obvious on crude prices. But what about other commodities? Because that's not going to be spared either, right? I'd imagine, especially because there's so much of talk that commodities are coming out of a bull cycle, and they have to.
Well, that's right. I mean, you look at copper, you look at, you know, the soybeans, have a look at, you know, different markets, iron ore and metals. Gold has been fairly range bound. It hasn't done a lot to really break out. But with that stronger US dollar, there's no real political uncertainty in the sense of geopolitics entering the market. So at the present, you would have to say that it's going to be an interesting run up into, you know, the early part, the first quarter of 19, and then it's a little bit of a wait and see. If we do see 3 rate rises, and I'm sitting here next year, God willing, and everything goes well, and then I think that the US is going to be a different position than what it is right now. But at the present, I would say that I'm erring to the side of possibly President Trump containing Fed rate rises. Maybe 2 next year may be sufficient. Who knows? But at the present, you would have to say that there's going to be a very volatile year, because I think it's just going to carry on from what we saw in US equities in 18.